Bismillahirrahmanirrahim. Today's our very first topic of ATX is income tax computation. Here you are going to witness a lot of similarities which you already learned in your TX course. So be ready for it, but new items, new things are going to come. But most of the things will be a recap of TX and additional items are going to appear. Okay. So first of all, we are going to start the topic which is called income tax computations for individuals. Here, individual means a person who is a sole trader. For example, a sole trader is making trading income. He is earning profits, which is called trading income. Am I right? An
Yes, sir.
individual person can be an employee like us. He can earn employment income, which is called salary. Am I right?
Yes.
A sole trader can be Pinda Chaudhary, yani he can be a kafil, he can be a arbab, yani the local, the you can say the landlords who have lands and who rented it them out and earned the rental income, which is called property income. Right?
Yes.
A person can be a retired person. Retired person can earn pension. A retired person can earn pension income. Am I right?
Yes, sir.
Those four incomes are categorized under the heading of known savings. Yani, an individual who is earning known savings means he can earn trading income, he can earn from employment income, or he can earn the money through pension. That the all these those three comes under the head of known saving. We have the second head of income, which is called saving income. Saving income means haram, yani interest. And the third head is dividend. Why three heads, sir? Why not four heads or why not only one head? Because the UK taxation, the government of UK implemented tax slaves, different tax slaves for different sources of income. For example, for non-savings, they apply 20, 40, and 45% of tax. For saving, they give some exemption plus 20, 50, and 45% of tax. For dividend, they give some exemptions, and after exemptions, 8.75, 33.75, and so on, the tax rates are applicable. So each heading, each category is going to have different tax slaves. Okay.
Mm.
So that's why they they did like this. They categorize the incomes as per the tax rates. Non-savings means all the four of them will going to have same tax rates. For savings, there are different tax rates, and for dividend, there are going to be different tax rates. What's my point?
Yes, sir.
What we are learning ATX. So for individuals, always remember like income, like financial accounting used to have a financial year for which we are making income statement, any profit and loss statement, and we are producing SFP, any balance sheet. In the tax world, there is something called tax year. For individuals, we have our tax year, which is starting from 6th of April and going to be ended on 5th of April. Our syllabus for the attempt, which attempt? December 24 attempt and March 25th attempt, the relevant tax year as per ACCA as per the ACCA, the relevant tax year is 23-24. This is a short name of this tax year, which starts from 6th of April 2023 and ends on 5th of April 2024. Each tax year is going to be examined for 4 attempts. First one is June, which already left, June 24, and September 24, which is coming up in next month, and then December 24, which inshallah you are going to appear for your ATX, and then March 2025, the syllabus, the rules, the concepts, the videos, everything will remain same. Nothing is going to be changed until March 2025. After March 2025, there is going to be a change in the syllabus. Okay.
Yes, sir.
The chapter we started, we will focus study hub. So the chapter we are starting today, this is chapter 2 in ACCA study hub. Okay. In the study hub, this is chapter number 2. So we are starting today. We are beginning our syllabus with chapter 2 of study hub. Okay. Now,
Yes, sir.
that is the format. That is the format. Till here, you are not going to witness any difference as compared to your TX. Same thing. Now, with blue color, I am writing some additional things which are part of your ATX syllabus and which you didn't learn in your TX syllabus. Okay. So the
Yes,
first
sir.
one, overseas income. There is a concept of overseas income, and you are going to get income from other countries other than UK. This is going to be chapter 13 of Study Hub. Inshallah, we are going to learn this one as well, and it's going to be part of your non-saving income. One more additional income is there, which is called trust income. Trust. Trust any charities, NFPs, and not-for-profit organizations. Here we are going to learn these two additional incomes, which are trust income and overseas income, which you never learned in your TX journey. This is first time you are going to witness when you will study ATX. Okay.
Okay.
Then we had a basic format which we learned earlier when we were doing TX. The format supposed to be like this: non-savings, and then savings. Saving means haram, yani interest, then dividend, jumana, and the total column. Remember? Thoda,
Yes, sir.
thoda, thoda.
I revised this. That's right.
Okay, very good. So, in non-savings, we used to have 1, 2, 3, 4, 5, 6. All the 6 above. واحد اثنين ثلاثة أربعة خمسة ستة 1 2 3 4 5 6. Am I right?
Yes.
So if I write all of them in very fast speed, like trading income, property income, uh, employment income, pension received, overseas income, and trust income. واحد اثنين ثلاثة أربعة خمسة ستة 6 items. Then I will write haram income, interest income. There's going to be details for it, which we are going to learn. There are some additional points in interest income, which we never learned in our TX journey. Then we will have dividend. In dividend also, we are going to learn some additional points, which we never learned in our TX journey. Okay. So the form is almost same, only two additional income came here, and that is known as total income. Okay. After total income, we have a tax reducer. Why tax reducer? Because as your income reduces, if you deduct something from your total income, remember that If you deduct anything from your total income, your income will reduce. And wallahi, if income reduces, the tax is going to reduce, right or wrong?
Yes.
The first item is qualifying interest. The first item is qualifying interest. What is qualifying interest? Very easy. Same thing which we had in our team journey. The ATX handouts which I sent you, already mentioned is over there as well. Let me read it for you. Qualifying interest. Qualifying interest, always remember, is an interest expense. Interest expense means it's an interest payment. Then is the taxpayer paying it off. It's a payment by taxpayer. Right or wrong?
Yes.
If a taxpayer is paying an interest, why? Leash, क्यों? Why a taxpayer is paying interest? Is he crazy? Is he
Hello.
why a taxpayer is paying interest? Tell me.
So you just got cut off.
Okay. Why a taxpayer is paying interest? Why? क्यों? Can you hear me?
Yes, sir.
Can you hear me?
Yeah, now I can hear you. I can.
Why a taxpayer is paying interest? Why?
Um,
Because of a loan. Because of what?
Don't.
A taxpayer is paying interest if he acquired or if he took a loan. Am I right or am I wrong?
Yes, sir.
Okay. If a taxpayer if a taxpayer acquired a loan, he have to pay interest. Now the thing is, why he acquired the loan? Why he took the loan? The reason of loan. We have to consider. We have to think. What is the reason? Lesh, why, क्यों he took the loan? We have to decide it. So, we will see that for which reason he took the loan. If the reason is out of those which are appearing in front of you right now at your screen, if the reason is out of those five, the interest for that particular loan is going to be qualifying interest. What is going to be?
Qualifying interest.
And qualifying interest is going to be deducted from your
Total.
income. Qualifying interest is going to be deducted from where?
Total income.
Now, the conditions, same condition, nothing changed. Number one, if you took the loan to purchase machinery, machinery for personal use or for business use?
Business use.
If we took machinery
Partly also.
used in partnership business, only where?
Partnership business.
Then it's going to be a qualifying interest. Okay.
Okay.
Then what? Then if we took a loan, if we took a loan for what now? If we took a loan, the purpose is to some asset, buy some asset which we can use in our job. For example, where our office is far away, our office is far away and our home is a bit, yani, office is very far. And every day it's really difficult to reach to the office. And in order to make it simple, if a taxpayer bought, if a taxpayer bought a bike or a vehicle, by taking a loan. So he can have easiness, he can have ease in his journey, in his transportation, in his travel to the office. That loan to acquire a car or a bike to reach office is going to be a qualifying loan. And the interest is going to be deducted from your total income. Same thing applies. Yani, for example, if a person took a loan to buy a laptop, and that laptop he is going to use for his employment purposes, then again the loan is a qualifying loan and the interest is qualifying interest, which is going to be deducted from your total income. Any problem?
No.
And if you took a loan to buy shares, shares means investment. Yani you don't have money, but you have musti. Okay? No money, more musti, and you want to invest in somewhere where in a partnership, in an employee control company, or in a cooperative society. Those three. If you took acquire a loan to purchase shares in number one partnership, you know partnership is to
Yes.
employee control company, a company which is owned by employees. In this world, Nokia. Did you heard Nokia?
Yes. Yes. An
And
old phone.
Nokia was a giant. Samsung Khallivalli, Nokia. Everyone needs Nokia. But after Android, Nokia became Khallivalli and Samsung and iPhone is everywhere, right?
Yes.
So Nokia became Khallivalli. Who bought Nokia? Their employees. And now Nokia is making very basic phones for Asian.
Yeah.
You are also from India, so you know in India, in Pakistan, in Bangladesh, in Nepal, there are snatching and this type of things. People are running away with the phone, and this drama is happening here. So what happens? They are making cheap phones, small phones. So if someone
Okay.
took it, no problem, no bother. Okay.
Yes.
So
But
don't,
it's still strong.
huh?
But it's still strong. Doesn't break often.
So yes, so that type of phones Nokia is producing nowadays. So Nokia is a practical example of employee control company and a cooperative society. Long ago, when you started your ACCA, you started with a paper called FBT or F1. In that paper, a teacher explained you, beta, what is cooperative society? Cooperative society is formed in order to achieve an objective. There are no shareholders, there are members who are joining hands together to achieve a goal or an objective. That is an example, that is a definition of cooperatives. Remember F1? No? Then I told you already. Any problem?
No, sir.
Here in TX or ATX never thinks that examiner is going to ask you define cooperative society. Examiner is not going to ask you this. He is not crazy. He is not dumb. Okay. He has a lot to ask. So, but just remember, if you took a loan to buy a machinery for employment, if you took a loan to buy a machinery for partnership use, if you took a loan to buy shares in partnership, if you took a loan to buy shares in employee control company, if you took a loan to buy interest, yani the shares in cooperative society, either case, either of five, any of the case is there, the loan is a qualifying loan and the interest of the loan is going to be deducted from total income. And after deducting it, we will have an answer. The answer is known as net income. What
Net
is
income.
net income? Any problem?
No, sir.
After we reach net income, automatically from our heart, from our brain, a thing will appear. भाई personal allowance किधर है? Where is the personal allowance? Automatic. Automatic inside. We will hear from our mind. Ting 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 ting. Hello, hello, Jumana. Jumana, still personal net income. Hello, excuse me, Jumana. You reach still net income. Now think about personal allowance. Okay, okay. Whenever we reach to net
12,000.
automatic 1,570 will come in our mind. What is this? This is a
Taxable income.
income reducer means is going to reduce my tax. Correct or wrong?
Yes, sir.
And it is a fixed amount of Wahid, Itnain, Hamsa, 70, right? 1, 2, 5, 7, 0. Any problem?
No, sir.
This personal allowance can be reduced. How we will learn soon. This personal allowance can be reduced. How we will learn soon. But wait for it. This is a very basic format to compute the to compute what? Compute what? To compute taxable income. Got my point?
Income tax.
Taxable income.
Yeah, before the liability. Okay.
Income tax is the topic, and we are computing taxable income in it. Okay. Any problem in it?
No, sir. Not yet.
Okay. As this is my habit, I will never move until I do some questions, some practice on a thing which I just explained. So here is a very basic, very easy, basic, bachcho wala. You know bachcho wala basic? Basic, bachcho wala question. And I'm not going to calculate net income. We will calculate taxable income in it.
Taxable income.
Okay.
Okay.
We know our format. Our format is of 4 columns. Non-saving,
Yes.
haram, yani savings, then dividend,
Dividend.
and at last, total. Let's begin. Tell me one by one.
Trading income in non-savings 15,000. Employment income, property income will go in non-savings. Then interest received will go in savings. And dividend received will go in dividend. So we'll get the total income now.
Okay,
45,000. Yeah.
correct.
5,000 and 10,000. Then less interest on loan to invest in a partnership because it's a qualifying interest.
Okay. The loan to invest in partnership. Just now we learned the conditions, and this is
Yes.
the condition of qualifying loan, resulting a qualifying interest of £5,000. Oh my God, £5,000 is a very big amount. MashaAllah, MashaAllah. And after that, we get
Net income. Yeah.
net income 40, and then 5,
5,000.
10, and then 55.
55. So then less personal allowance and it'll go from non-savings first. So we'll
Automatic,
get the
our brain will tell us, excuse me, after net income, 1, 2, 5, 7, 0, ding, 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 ding. Okay, and finish. That is called,
taxable income.
help me with the calculator because I,
1 second. 27,430
1,
and Total, you will get 42,430.
40.
Yeah, 430.
That's it. That's it for this Bacho wala easy question. Now this
Yes.
question from my side. This question which we did now is from my handout. Now there's a question I am going to show is coming up from your study. This PDF, inshallah, which I am writing here, I will share with you after the class. So if you want to note it down or if you want to do something, you can do it, inshallah. Okay.
Yes.
Now what I was saying. Now this question is in my handout, but Aslan, actually, this is not my question. This question is by ACCA itself from Hub. Okay. So let's begin. Just I am reading it. Just you read it, not me. Read. What it says.
This one.
Yeah, yeah.
Alice is a partner in partnership. She had the following income for the tax year 23-24.
Mhm.
And share of partnerships, tax adjusted trading profit. Okay.
What the drama is all about. Drama?
Okay, okay. Okay, so over here, she has share of partnerships, tax adjusted trading profits. Okay, bank interest. During the tax year 23-24, Alice paid 2,000 of interest on a loan taken out to finance her contribution to the capital of the firm which she is a part.
How many columns are required?
Savings and total. There's no dividend here.
Very nice. The first income is
Tax adjusted trading profits
the trading profit, tax agency trading profit are sawa sawa yani. Sawa sawa मालूम
in
से
non-savings.
bank interest wallahi haram. خلاص? No more income?
No. During the tax year,
Has a total income.
yes,
Qualifying interest. Let's search
2,000.
qualifying interest. We know interest payment might be a qualifying interest. Let's see the conditions where those are. There are conditions in front of you. Correct?
Loan, yeah. So this is loan to invest in a partnership. Okay.
It is. It is good. That it is a loan to invest in partnership. How? It's a difficult English, but financer
Yeah.
contribute capital of the firm. Capital of the firm means partnership. Partnership is
Invest, yeah, in the partnership, yes.
so it's a qualifying interest of 1,000. So let's deduct it. And that is known as net income. After net income, you will get a call.
Net income.
Call from personal house. And personal house will say, hey, Jumana, don't forget me, huh? Okay, no problem.
5,000 pesos. Yeah.
Taxable income.
We will get it as 39,930 in non-savings.
39.
1,930
And
We will get it as 40,930.
any problem till now?
No, not yet. No.
No problem, huh?
No.
Now, Mr. Personal Allowance. Hello, Personal Allowance. How are you? He used to call us, no? He used to call us. Whenever we are reaching to net income, he's calling. Hello, I am there, huh? Don't forget me. मैं इधर ही है भाई. हम बोलते हैं हाँ इधर ही आजा भाई आजा. कितना आजा कितना? How much?
12,570. Yeah.
That is the fixed amount, but if anti-ANI
Just in net income.
is greater than 100,000, personal allowance is going to reduce. That is a rule. If it is greater than personal allowance, learn something again, which we already did in our TX syllabus. We shall recap now. If our
Yeah.
adjusted net income is greater than 100,000, personal allowance is going to reduce. Reduce by what? Reduce by
There's
what?
a formula, I guess.
There is a formula. I will explain you by a formula. Inshallah, you will not remember the formula. I will give you a trick. Direct. No, without remembering it. So formula will come now, but before it, what is ANI? ANI is adjusted net income, right?
Yes.
To compute it, we will take total net income from the total column, right?
Yes.
Just now go up. What is total net income? किधर है? This is the total net income.
Before all of it. Yeah. Sorry. After.
Now, where it is? Tell me. Total net
Here,
income.
55,000.
Ah, very nice. Total column, the column of total. We will found inshallah the total net income. And we will take it. Aja bhai aja. Come here. Okay. After it comes here, we will deduct two items from here. Those two items are known as number one,
Personal pension and gifted. Yeah.
personal pension and gifted, and both of them are supposed to be gross amount. And in the exam, it will given us as a net amount. So there's a formula to gross it up. 100 by 80 is the formula, fixed formula to gross up. And remember that if question is silent, by default, both of them are the net amount and we have to gross them up. Okay?
Yes, sir.
And that is very nice. If this amount, this ANI amount is greater than 100,000, PA will reduce. Okay?
Yes.
How it reduce? Let me tell you. With the help. Before this, I was saying, let's feel this thing, the reduction of personal allowance with the help of a question. This question again is from your study hub. This question is by ACCA itself. This is ATX question in ACC Hub, not TX question. So let's do that together. Here they gave us three amounts. Net income, adjusted net income. They already gave us ANI and they are asking calculate taxable income. So no problem. Net income is given, no? The case A, net income. Net income we know that adding up the income, deducting the qualifying interest, we used to have the net income, correct?
Yes.
After that, personal allowance. ANI supposed to be greater than 100,000 to think about reduction, right?
Yes.
Is there ANI is greater than 100,000 or no?
No, it's not.
It's not. So 12570, khalas, finish. That is the taxable income. Oh wow, very nice. Done. Dang, dang, dang. Answer is
Answer is 47,430.
that's it. Talking about B. B for ball. Net income 110. After net income, a call from personal allowance. I am here, and we will say, please hold down. Sabar karo. Relax. We will reduce you your personal allowance. Oh, why? He's asking why. Leish. Kyun? Why you are reducing me? So we are saying, Habibi, ANI greater than 100,000. So
Yes.
be ready to reduce, right or wrong?
Yes, sir.
ANI is 110, correct?
Yes.
One thing. I will ask you something and it is going to develop a formula, inshallah. Tell me, that is the personal allowance available now?
Yes. Ideally.
So, can you tell me the ANI is higher or is how much? Yani, what amount is in excess of 100,000? ANI is in excess of 100,000 by how much?
10,000.
What
So,
half of 10,000?
5,000.
So personal loss is going to reduce by the excess of half of the excess. Half of the excess. Yani, what is your ANI? ANI is 110 minus 100,000 to take the excess out. Excess will come divided by 2. Yani half of the excess. 10,000, half of 10,000 is 5,000. So the personal loss is going to be reduced by 5,000 because ANI is in excess of 100,000 by 10,000. So half of 10,000 is 5,000. So the personal allowance is going to be 75
7570.
and taxable income is going to be
102 430.
any confusion in that.
No, sir.
Now I am going up. I'm writing here. If ANI is greater than or equals to is this sign is okay?
Yeah.
125,170. This is a fixed amount, okay? 140. 125,140. Then Khalli Walli personal allowance. Personal allowance is
Yeah.
not available. Personal allowance became Khalli Walli. Khalli Walli yani khalas, finish. Go to Hajj. Go to heaven, right? Personal allowance is
Yes.
going to be bye bye. Cha cha. Personal allowance, no need. Jao, khalas, finish. If your ANI is 125,140 or higher, then person house is bye bye, tata. Got my point?
Yes, sir.
Let me write it here in the part C. What happens?
Yes.
Net income
So
is
directly.
127,000. ANI and net income is same, no?
Yes.
ANI is 127,000, which is
Greater than 1.
125,140. So personal allowance, go Baba go. Get lost your personal allowance, correct?
Correct.
Halli
0.
walli ho ja bhai. Run away. Funny. That is the reduction of personal allowance. When I am teaching TX, you took my videos for TX. It took around 2 classes for me to reach till here. It took around 4 hours to me to reach till this point. And I used to do a lots of questions. Basic question to calculate total income, then net income, then taxable income, then personal allowance, this one, then other question for that one, for other question for that one, for one more question for that, one more. And in 2 classes, I used to reach at that point where we reached in around 52 minutes today. Till now, around 52 minutes, we started the class. This is our first lecture. And in 52 minutes, we almost cover 4 hours of TX. Got my point?
Yes.
Because,
And that is base.
huh?
That is base. So that requires 4 hours, I think.
I didn't get you. What you said?
That is base, no taxation, like introduction to it fully. So it does require 4 hours.
Yes, because it was at the time of TX, it's a very, 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 basic thing. New thing for
Yeah.
it's taking time for them to absorb. But just now you give the paper before 2 months. So that
Yes.
you have something in your mind. So it's coming a refresher. Got it?
Yes. Yes, sir.
Now, till here we completed. Now we have a new topic. When I'm teaching TX, I used to tell students 60% is the marginal rate of relief. Just memorize it and khalas. And it's usually in my text, in my quiz as well. The answer of marginal rate is 60%. Bas khalas. I used to tell students just memorize this and finish. Go home. Khalas. But now we are big boys, big girl. Here we need to know how this marginal relief rate is coming up, what is marginal rate, how is going to be changed, how is going to be calculated. This is what we will learn. This is a new topic which is not in the TX syllabus. This topic which is in front of you, the marginal rate of tax is not in TX, but it is in ATX. So inshallah in next class, we will start with this one and we will try to catch up this marginal rate of tax in next class, and we will again do how to calculate tax on loan savings, dividend, marriage allowance, child benefit, plus a new thing which is income for minors. And we have very good topic here, the additional topic, the tax planning among spouse. The tax planning among spouse rules we will discuss inshallah in the next class. Okay?
Yes, sir. Sure.
Anything you need to know?
No, sir. I'll just have a read of them.